Hello, everyone. Welcome back to my channel. So in this episode, I'm just going to give you a quick market update. Now, whatever I say in this video is not financial advice. I'd advise you to do your own research before you buy any cryptocurrency. Okay, so in this video, we have a lot to talk about. The market has been dumping since basically March, and there hasn't been any significant sign of reversal just yet. So before we start this video, I kindly ask you to go down and hit up the like, because it really helps with the algorithm. As I am a small YouTuber, even one like, I really appreciate it. So please, can we get the likes up? I'd like to break at least 10 likes in this video. That would be great. So let's just dive into the Bitcoin price. So the last time I made a video, I was talking about this range here. We were chopping in this range for coming on now nearly 4 months. So obviously it did break the highs in the mid-March. So it did put in a high of 73,700. And since then, it just has been chopping in this range. It did put in this low here in May, and then it did move back up to the upside. But as you notice, it didn't break the highs, and you can easily draw a trend line here. So just from this high, and yeah, it just kind of respected this trend line. It never ever broke this trend. Now, this was obviously a telltale sign that the market was exhausted. It just didn't have enough in it to break the all-time highs. Now, this was kind of frustrating, as we did see the stock market breaking all-time highs. So my assumption was that Bitcoin would eventually break the all-time highs, but so far it didn't. And in the previous video, I did talk about this reverse head and shoulders pattern. Now, you see, this was the first shoulder, this was the head, and in my previous video, it was somewhere, the price action was hovering around just above 60,000. So I thought it was forming the second shoulder. Now, an inverse head and shoulders pattern is a continuation pattern. So usually 69% of the time, this would be a continuation pattern, and then the price would move back up to the upside. Now, obviously, no one knows where the price action is going to go. You could go on and watch loads of different YouTubers, and they're just sharing their opinion. So no one has a crystal ball. No one knows exactly where price is going, but we can just use probabilities, and we can just assume and just a plan for where we think price action is going. Price action came below 58,000. This inverse head and shoulders pattern is invalidated. So we can no longer go with this pattern. We did see Bitcoin break down and go as low as 53,500. Now, I didn't see this happening. I really did think that the 60K level would hold, but here we are. Now we are in this situation. So how did we get here? Why did price sell off so much? So there has been a lot of FUD in the market. So FUD stands for fear, uncertainty, and doubt. So this was due to, we got rumors of the Mt. Gox. So the Mt. Gox was an exchange that was in Japan. It was about 11 years ago where it got hacked and eventually went into liquidation. So as of recent, in the last few weeks, we have seen the Mt. Gox wallets moving around coins, and they did come out with a statement saying they are distributing some of the Bitcoin back to the original investors. So a lot of people thought that, okay, if the original investors were getting back their Bitcoin, this was definitely going to put some sell pressure on the market. So obviously, if you bought Bitcoin like 11 years ago and you weren't able to sell it and you received it back, chances are you probably would sell some, because you're actually up quite a lot in the last 11 years. This, in my opinion, caused the majority of the sell-off, especially here in the start of June. So this was the Mt. Gox sell-off, right? So all in all, we thought we might recover and hold the lows here at 60K, but we didn't. So another reason for the continued sell-off is the German government has been selling off its Bitcoin that has been seized. So the Bitcoin price is currently sitting at 56,700, and it's pretty much in no man's land. So basically, I would like to see the Bitcoin price to reclaim the 200-day moving average. So That roughly is sitting at like 58K. So the bulls really have to show up here. And I would like to see it flip the 200-day moving average and hold it as support to tell me that there is some continuation, or we probably might see some more downside. It's very, very hard to tell. I know there is a lot of traders saying that we probably will go down to like 40K, which I don't think so. I think the lowest we'll probably go is maybe 48K. So as you can see here on the chart, there is this other demand zone here. So we just draw it in, a little rectangle. So that would be between 50 to 52,000. Now, it might wick just below that demand zone just to cause another bear trap. So I don't believe it'll go lower than maybe 48,000. That's my target. Now, we do have some bullish headwinds ahead of us. So I'll just go through that in this video. But I did make this tweet here on Friday. So this is just the zoomed out version of Bitcoin. So as you can see here, back in June of last year, we did see the price action. So if I just zoom in here. So as you can see here, back in June of 2023, you did see price action lose its support, come down, and it's basically what you call a spring or a bear trap. So basically a bear trap would, once it loses support, a lot of investors then would think, okay, there's more downside to be had. So a lot of traders then would flip short, and obviously then the price comes back up again, trapping all those traders. So that's what you call a bear trap. So in a spring, in the Wyckoff schematic, you would see before price explodes out of its trend, it would move downwards and get to grab all the liquidity lower down, and then have a big massive impulse move. And you see this again and again. So you see, even here, you've seen it as well too. So that's exactly what I think is currently happening with Bitcoin. So I also wrote this tweet here on Friday, which was very positive. So we had a very big impulse move to the downside on Friday, which spooked a lot of investors. And it was actually one of the biggest liquidations we had since FTX, the FTX collapse back in 2023. So it was quite huge. But last Friday, we did see 143 million inflow into the spot Bitcoin ETF. This is very positive news. It means the men in suits are buying the dip. So basically, the investors that hold the spot Bitcoin ETF didn't get so much spooked about the dip on Friday. And what they did was they actually bought the dip. So that was very, very positive news. And then today I'm keeping track of the Bitcoin ETF inflows. And today is still another positive day. Now, we didn't get BlackRock's, they normally update later on this evening. So I'll probably get it tomorrow morning as I'm recording this video. But so far, there has been 107.6 million inflows into the spot ETF. Now, this is a trend that I like to see. That means that Wall Street basically are buying the dip. From Watch Guru, just in, German government sells 17,000 BTC, worth $951 million. It's the largest single-day Bitcoin liquidation. Now, that is huge, and I'm quite surprised how well the Bitcoin price has actually held up today. So this is actually some bullish news to look forward to in Q3. So as we entered July, we have started the third quarter of the year. So you're bearish. Think again. FTX will distribute 16 billion in cash to customers in Q3. So most FTX users were crypto natives, and a big percent of returned money will flow back into crypto. Basically saying that $16 billion is going to be distributed back to customers that used FTX. So in my opinion, this is huge, and I'm sure all these customers will just use it to buy crypto. So this will obviously be very, very good for price action. Just in, all spot Ethereum ETF applicants filed their updated S1 forms. Fidelity, VanEck, Franklin, 21 Shares, Grayscale, and BlackRock. So this is very, very good. And I do imagine we will see the Ethereum ETF start trading as early as this week, and if not, definitely next week. So this is actually very, very good. And I'm sure this is going to reflect on the Ethereum price, because Ethereum, let's face it, Ethereum has very much underperformed all this year. And I suspect that we will see some nice inflows into this spot Ethereum ETF. So I did see this tweet as well too from Peter Schiff. And he said, at 54K, my guess is that over 70% of those who bought the Bitcoin ETF are losing money. When Bitcoin trades below 38K, 100% of Bitcoin ETF buyers will be losing money. That's when I expect the real selling to start, as most crypto ETF speculators will throw in the towel for good. Now, obviously, we know from looking at the inflows from the Bitcoin spot ETF, they're not throwing in the towel. They're actually buying the dip. So F you, Peter Schiff. Okay, so moving on here. This is actually a huge week for crypto because we do have the Fed, Jerome Powell, speaking tomorrow, and we also have the CPI data that will come in on Thursday. So key takeaways from this, from the talks tomorrow. So Federal Reserve Chair Jerome Powell will appear before lawmakers Tuesday and Wednesday of this week, where he will face questions about monetary policy and banking regulations. Some Congress members have been critical of the Fed for keeping interest rates high in this battle against inflation, a policy that has pushed up the cost of living. Powell may also be grilled about a proposed requirement for banks to hold more capital, which crisis argue which raises borrowing costs for individuals and small businesses. Why having borrowing costs for mortgages and other loans stayed so high for the past 2 years, and when might they start to come down? So there's plenty of questions that are going to be thrown at Jerome Powell tomorrow, and this, in my opinion, might shake the markets. Now, the last time Jerome Powell came out with the FOMC, he came out with a hawkish stance, and it really did spook the markets. And that was another reason for Bitcoin and risk assets to move to the downside. Now, we'll just have a quick look at this clip here of this is just basically CNBC talking about what they suspect from Jerome Powell tomorrow.
Let's talk more about the big week ahead, including the Fed chair's testimony. Our next guest says it is time for the Fed to come. Joining us this morning is Moody's chief economist, Mark Zandi. Mark, it's great to see you. You've been pretty consistent in your arguments late this week on the Hill. If you feel at least the narrative around it coming around to your point of view.
I do. I think they're moving in the right direction. I think the Chair Powell has script. He's going to continue to say that he needs to see a few more good inflation statistics numbers in the months ahead. I think he'll get them. I think inflation is all the trend lines look good, moving back to target, and I think he'll get the numbers he needs. Then I would expect them to start cutting rates in September. Now, if I were on the Fed, I'd been arguing for rate cuts at the end of last year. I think they're taking an increasing risk of putting too much pressure on the economy and financial system and ultimately breaking something. So, and I don't think that's necessary because the economy is at full employment, and again, inflation's headed back to target. But I'm not on the Fed, and that they have a different judgment. But I think they'll have the evidence they need to start cutting rates in September.
So you feel like July sets the tee for September then?
Yeah, I do. I think they'll get one. You were talking about the CPI number. We're going to get that on Thursday. That'll be a good number. I think the headline will be flat, 0, no increase. The core, excluding food and energy, will be up 0.2%. That's kind of right exactly where they would want to see it. So with that, I think they'll have enough to kind of lay the groundwork at the July meeting for a September rate cut.
What about we were talking about the other side of the mandate, which we're increasingly talking about, Mark, the jobs picture and how it's kind of moderating, cooling might be strong, weakening might be strong. Where do you think that ends up? Because sometimes when you do see unemployment rate climb, what are we, 0.7% off the lows? You can really see that start to pick up if the Fed doesn't do anything about it.
Yeah, that's what I worry about. I mean, the economy is slowing. You can see it everywhere. You can see it in retail sales, vehicle sales. You can see it in the GDP number. GDP growth in the first quarter was 1.4%. The second quarter, based on all the data we're getting, it's tracking about the same, 1.4. That's below the economy's potential. That's why unemployment is moving higher. We're up 0.5 point, over the past year. Clearly the labor supply is playing a role, but nonetheless, it's starting to move higher. Initial claims are moving higher. I mean, hours worked are down, temp jobs are down. The revisions we're getting to the data, that we got last week, would be consistent with an economy that's downshifting. All that's okay, but I get increasingly nervous about it. Again, in the context of they've done what they need to do. We're at full employment and inflation is within spitting distance of target and clearly headed in that direction. So we're taking a risk here. Something.
So is September too late? You think they're gonna wreck the recovery? I mean,
no, I mean,
soft landing?
I think September's okay. It's fine, but the odds of them making a mistake are higher. The risks are mounting. So I think odds are that it will be just fine, and September is soon enough. But why take that chance? Why take that risk? And it's not only about the real economy. The financial system is also under tremendous pressure. I mean, the yield curve is still inverted. Short rates are higher than long rates. And that's not consistent with a well-functioning economy or financial system. And the banks and other financial institutions and markets are under a lot of pressure. And again, I don't. The odds are that it won't break before September. But why take that risk?
So obviously, you can see Federal Jerome Powell has a lot of tough questions to answer tomorrow. Now, in my opinion, but I would like if Jerome Powell comes out with a more dovish stance. So this would be good for risk on markets, and maybe hint that there is a Fed cut coming maybe in July, or obviously like what this man just said here, in September. So that is what a lot of investors are waiting for. They're waiting for the rate cut. So obviously money would become cheaper to borrow, and this is obviously good for risk on assets like Bitcoin and cryptocurrency. But we'll have to wait and see how Jerome Powell speech goes tomorrow. Anyway, that's your quick update on the crypto markets. If you got value of this one, please go down, hit the like and hit the subscribe, and I will see you in the next video.